and then let's take it from here. Right, because we start from Dixie, and then we'll just work our way down. You guys know how this goes by now. Dixie, this area we're looking at, right? So mitigated liquidity pocket. So that's your weekly order block from history there. Area where sellers are meant to be in control. Buyers are trying to take control right now, right? So that is, if you're bullish on Dixie, that's a good sign. But obviously, if you're in crypto, you shouldn't really be bullish on Dixie, because this going up generally means risk on going down, right? So Dixie for now, holding this fib speed fan from history, right, all the way from up there. Holding your mitigated liquidity pocket, successfully flipping your range high. So that black channel right there, successfully flipping that. So what we really don't want to see now on Dixie is we don't want to see this. Right? We don't want to see a grind up. You want to see another go up here, maybe put a lower high, right? Put some local distributive structure in. You get your spring back test, get that Wyckoff scenario going, locally speaking, and then reject. That's what you want to see, right? You don't want to see in the Dixie now go into reclaim. If you do that, then honestly, I think we go towards 109 to 110 Dixie, right? So we don't want to see that happening on the Dixie. If you do roll over, however, right, that'd be very nice. Maybe, grind, chop around here until the end of the year perhaps, and then going into the new year, just keep swing failure patterning up here. Keep closing below the 382. If that happens, then I would expect into the new year first quarter for the Dixie to just absolutely die, and then go towards our basically risk on environment, right? And maybe what happens at the FOMC meeting helps with this. But for now, as we speak in front of the chart, this is a bullish back test. Right, so we don't want to see reclaims and higher here. We want to see lower highs. USDT dominance, like we were just talking about, however, right? So this is what we looked at last stream. We said, okay, you've lost your trend line in this sense, right? So if you were to put your actual trend line down, with regards to how many taps have you had in history, we've lost it. We bearishly back tested it, right? That's a good first sign. Another thing I did say was we have a, let's say, extreme trend line right over here. Extreme in the sense that you've had two taps off it before, 1, 2, so it's valid, but you haven't tapped it again since, right? So that is what we are currently basically trying to stay above. As long as you stay above this, we can expect some chop between this range, is what we were talking about last week. So you just about front run it there, right? If you can see, just about front run that trend line, just about front run this. 1 second. Yeah, I mean that is a shock right there. It's not quite deep enough. I want it to be deeper for it to be a proper shark. That to be a 1.618. But you're heading towards a completed bullish MSA basically as well for this, right? So as long as you now stay below this over time, what we're saying is if we cannot go and reclaim, then we're looking for eventual breakdown, right? But if you now go and reclaim the mid of this demand zone from history, and then you go and reclaim this zone, right? Something like this. So basically, by the time we close the year, we definitely want to be below this blue line at a minimum. We do not want to be above it. Alright, so Dixie, very very simple. Currently, you've rejected off your key demand zone from history, right? We can see 1, 2, 3, 4, 5, 6, 7 taps. You finally broken below. You want that bearish back test, and then let's go and sweep the entire downside. Right, that's what you want. Maybe you go as low as 1%. Who knows? 2, 1, something like this. And then after that, once we think everything's topped out, that's when you look for that recovery. Right, go back up. That correlates with your bear market, right? But this is still very very good. There's nothing on the Dixie currently that is bullish, which is of course bullish for crypto. The only thing we've got to watch out for is a reclaim of this blue line. If you get that reclaim, right, especially if you get something like this, wick down but closes above that red line, then I'd be expecting, to be honest, I'd probably think move back up towards here before going down, right? But I don't think this happens. That's why I'm not really concerned about that. As long as you keep rejecting here, everything is fine. So that is the Dixie. Right now, you're below your 200-day EMA. You're below your VWAP. You're trying to reclaim your daily VWAP, but you're below your daily 200 as well. So, in all honesty, everything's fine on the Dixie. Not Dixie, sorry, on the USDT dominance. We just want to see this bleed over time. Just see it bleed. Now, USDT plus USDC dominance, another one. So we basically front ran that the 87886 zone, right? We basically front ran it, the 764, 786, the 13.114%. All of these levels we basically gone and front ran. We're rejecting, however, off the 852. So as long as this is a rejection, like I said, your bull market target hasn't changed, right? Before the bear market comes around, I want to see this going to be hit. Get the 886 down, build a macro wave structure, right? In this M shape here. Build a macro 886, that's a bat, and then your next bear market is simply going to be a reaction to this bat, right? Maybe you get the T1, you get a relief bounce, and then you get a deeper flush to the T2. Maybe you go all the way up, I don't know, but up until to about the T2, let's say, if we do say that's the high and this is the low, this around here is where your T2 would be, right over here. Right, so for me right now as we speak, this is what I'd have in mind for next bear market. Let's see if we can top somewhere around here before crashing again, and that going back down would be something I'll look for that uptrending phase of the market again, right? But of course that's off in the future for, you could do something like this. So for now anyway, the target is down over here, 2.80% on USDT plus USDC dominance. Let's see if we get it. We might not, but it'd be great if we did, right? This would be a very confluential harmonic on our screen right now. So that's that. Let's now look at Bitcoin dominance. Right, there we go. The scenario we were talking about. Let's see if we can get distributive structure. We're getting it, right? We're bouncing off this gray box, which was a resistance at one point. That has been flipped to support for now, right? We do not want to see, of course, this carrying on. If you're in alts, what you want to see is a breakdown now. Right? You don't want to see this continuing trend because alts are just going to keep suffering. So you want to go up again. Perhaps put that distributive top in. Let me just turn this off real quick for now. One sec. There we go. Go ahead and put that inverted smiley in, perhaps, right? Jesus Christ. Like that. Basically, let market structure tell us that the top is in, right? If you can reject here and carry on going down, that is fine. You can also, if we take a look in terms of the weekly, right? What we have here is a weekly seller zone area where sellers were active on the weekly, right over there. We can see it has been both support and resistance, right? It's been both support and resistance. So we front run it for now, but maybe even something like this, like a deeper pullback like this, something like this. That'd be nice if we got it. If not, then this is a valid rejection anyway, just a front run. Right, but currently speaking, we're having that inverted smiley put in. Distributive structure. This would be a very confluential area to give that distributive structure on Bitcoin dominance. Why? Because it used to be a demand zone. Right? It used to be a demand zone. You can see that this used to be an area where you're saying buyers are meant to be in control over the sellers. Demand should be greater than supply. That is the thesis for this zone. But what we see is that didn't happen. Right? This red candle here and you slicing through, completely mitigating this demand zone. That's what this is now, a mitigated liquidity pocket. That's telling you that in fact sellers were in control over the buyers and supply was greater than demand in an area where the opposite should have been true, right? So now this retest further confirms this narrative right over here. That is why we want to see that rejection in this area. If you reclaim and buyers do something like this, right? What you're saying is an area where buyers should be in control of the sellers, demand should be greater than supply, is once again an area where buyers are in control of the sellers and demand is greater than supply. If that happened, you look at what happened last time this was confirmed. Well, you had to move up to a 67%, right, minimum. So then you'd be expecting this target if this was flipped back into support. This is just historical price action, right? But we don't have that, luckily. Right now we're getting the rejection. So we ask ourselves, okay, what happens when this thing rejects? Well, the range we have working with now is this whole range. So the first thing I'll do, draw a box, target the mid of that range, see what kind of reaction we get there. If you lose the mid, then just target the lows of the range, right? So perhaps this demand zone and then the lowest still. That is if we get this rejection. If you get the flip, then this is the range you're working with, right over here. So you'd be targeting again somewhere around the mid, and then if you get above that, somewhere around the highs again. So for now, however, Bitcoin dominance, this is what we want to see. We've had a breakdown. We want to see a bearish back test. We want to confirm this to be deviation. We want to confirm sellers are still in control, and then we want to just nuke it lower, right? If you're in alts, this is what you're really waiting to see. Go flush out all of these wicks, basically, right? Your internal liquidity, go take all of it out. And then we have Ethereum dominance. So this one, trying to reclaim its important support. Hold in VWAP. when Ethereum gets that rotation, and you know, like it's going to be OTs when BTC is just chopping about, right? You think it's hit its top targets, BTC's chopping about, and then Ethereum starts to go ballistic. There'll be like a tiny window, maybe a month, maybe 2 months. There'll be a tiny window where Ethereum dominance, looking at Ethereum dominance is going to make sense, right? Because Bitcoin dominance is no longer going to be the primary focus. If Ethereum's the one taking the lead, then Ethereum dominance should be the focus. What you're using this for, very, very simple. You're simply asking yourself, should I be in ETH or should I be in alts? That's what I use this for, right? If Ethereum dominance is a resistance, just like with Bitcoin dominance, maybe rotate into alts whose ETH pairings look bullish. If Ethereum dominance is a support, and this looks like it's breaking structure to the upside, is putting higher lows in, and your alt does not look like it's ready to outperform against Ethereum, then rotate back into Ethereum, right? Because if you're taking the risk of expanding out the risk curve by going out from your high cap asset that's going to be taking the lead, then you've got to at least make sure you're outperforming the asset. Otherwise, you've taken a risk for diminishing returns. There's no point, right? So that's what we're going to be using this for, right? So Ethereum really hasn't had we're taking the spotlight move yet, but I think it will soon. So Ethereum dominance will be one to watch for at that particular moment in time. Now, total one, right? So we looked at these targets last stream. Your macro AB equals CD, right? There you go, 786. You have hit the 1.272, and you have closed below the 1.272 on the weekly. Right, we can see that we had multiple resistances going into this. That was one indication why this was bearish. Locally speaking, not bearish as in market stopped, bearish as in why we couldn't push higher yet. Right, you've hit a key level, and again, just in case there are harmonic doubters in here, this was put before Bitcoin even got here. Right, this was given as a target. This is simply price reacting to that 1.272. Right, 3.63 trillion. So price went there. You got multiple attempts to close above, right? But now you see every single attempt is met with closes below, i.e. the supply here we're saying is too great, right? The resistance is too great. So then, what happened? Buyers got absorbed, therefore you had a flush down. You just took out some liquidity, internally speaking, right? We have a high target at 3.72 trillion still. Apart from that, I don't see any other targets. So after this, you're just going to have to use your fib extensions and that's it. In terms of wave structure, I don't see any targets after this, right? So this is on the macro, that 1.272, and on the micro, not micro, but still, your more current wave structure, that 2.0, that's the max extensions we can put down right now. We need new wave structure to develop before I can put any extra, wave structures down from here. So for now, 3.63 to 3.72 trillion was the resistance to be looking at for total one, right? That is what we're currently rejecting off of. If we test the top of this parallel channel, you can see this here, right? Twice support, once, and right over here, twice, right? Twice support, twice resistance is a valid parallel channel. You confirm that breakout, I think you're going to go higher, right? But now if you do something like this and reconfirm this to be resistance, that would not look good, right? That looked pretty bearish locally speaking. That looked very distributive. I'd look for a deeper flush if that happened, and then like a continuation back up. But for now, as long as we close above this, that's fine. If you close below, there's a chance we have a deeper spike into this. Perhaps test the grey box and then go higher, right? So perhaps do something like this. But let's see how this weekly closes now. We've got 5 days and 12 hours. But so we're not rejecting out of nowhere. Is what I'm trying to say here. We have hit an extension target, right? We have hit the AB equals CD, 1.272, and if you wanted to, we could spike a bit higher before giving a bigger flush because we have valid targets above us still as well. So that is total one. Total two, we have hit the 1.618, right? Here is your 618 retracement, 1.618 is your extension, spiked above, and then completely broke down, right? Spiked above. Try to retest, which you did, right? You closed above, retested twice, and then move straight back down, right? So on the micro, this is why 3-day is a time frame I look at often on our streams, right? If you're getting low volume on the daily at a key area, just switch to the 3-day and above, right? 3-day to the weekly, because that will now make sure enough volume is actually encapsulated within your candles for you to get a better read, right? Because you can see there was no volume going into this. So you closed above, and then your retest, this is your breakout, this is your retest candle, completely failed. Bearish engulfing candle. So again, if we close below like this, then, and we go and confirm a lower high here, this is resistance again, then I'd expect a flush of the 3-month seller zone, something like this before we go higher, right? But let's see what happens. Again, we have on the weekly, that's what I'd be 3-day closes later today, weekly closes in 5 days time, so we still have time for this candle to develop, right? But again, the reason I'm pointing this out is there's a reason why you're front running this level, or rather there's a reason why you've rejected here, right? 1.618 of your ABCD. If we do go higher, I expect we raid this. Don't expect a double top. Double tops are not common at all, right? More often than not, they either get front run, like we're seeing, that engineers some highs, and eventually they get raided. The highs get raided, so does this, right? You're not going to see a perfect double top, in my opinion. If we do flip this, I'd expect resistance then around 2.06 trillion. Again, it's not a perfect 786, but on the macro, that's close enough, right? 1.272 target for that extension of the AB equals CD. That's where, around there is where I look for resistance to come in. So that's total 2. Total 3, what are we doing? So total 3, we've gone and raided all-time highs, as you can see, but closed, the candle body close on the weekly was pretty much at or slightly below the all-time high, which is why we're getting this pullback. With this pullback, we are retesting your 1.618, again, AB equals CD, right? If this retest is bullish, if the weekly especially closes like this, then honestly 1.36 trillion is where I'm looking next. Again, why? You have, it's not a perfect 786, but in my opinion, just close enough on the macro. That is, again, an ABCD. Right, somewhere around here. Don't take this as a gospel level, since that's not a perfect 786, right? You might get some chop in this area, but somewhere around here in this region somewhere is where I'd expect the next target to be for total 3, right? So this is a bullish backtest. There is nothing bearish about this chart, right? If this backtest is successful, then continuation up is what I'd be looking for now. If you clear below this, then I'll look for, okay, do we reclaim or not? If you don't, and you're below this, then I'd look for a deeper flush, something like this perhaps, before going back up again. Right, so you're line in the sand right now, 980.56 billion. Right, we need to stay above that. More importantly, we need to close the weekly above that, right, 980.56 billion. Next, we have others. Right, so if we look at total others, what did we do? Just about front ran the 1.618 in this case, right? Again, you're currently retesting resistance, your B high right over here. You're retesting that. I just realized I've not put that to a wick. What am I doing? One sec. That should be the high. In which case the 618 is around here. Okay, I need to change this target. Hang on, I realized I didn't put this to the wick high. This target needs to be changed. So let's do that real quick. So let's go validate this 618 first. So where did we hit the? Let's just put it here. There we go. There's your 618. I know I've not pinned it to the wick low, but what we're doing here is reading price action. That's all we're doing. Okay. What I mean by that is, where is your 618? Your 618 is around 186 billion. So this one right here. Right? All we're asking ourselves is, was the 618 actually respected or not? Right? So this is the AB equals CD 0.618. Was the 618 respected or not? And if we do this and you take a look, it very clearly was respected. Right? Even on the weekly, you can go on to the 2 weeks, you can see around there is where your candle body closes kept trying to, this is where buyers and sellers were trying to basically take control. Right? We can see that very, very clearly. So your 618 in that case is very, very valid. You can see support, support, resistance, support, support, resistance, right? Is the 618 validated? Yes, it is, right? Therefore, we can play it. That's the way I do it. I know some people are more stricter with harmonics than others, right? I am not the strictest when it comes to harmonics. For me, harmonics, simply describing wave structure, take the wave structure in account with the price action you've got around there, right? The price action clearly tells us the 618 is being regarded as both key supports and resistance. If that's the case, the wave structure has been validated. So now we'll be looking for the 1.618 target. I can't believe I didn't put it to the wick high. Hang on, let me do this. So the 1.618 is going to go up over here. Lock that in place. That is 479. So then the coordinates for this gets changed as well. There we go, perfect. Okay, so there's your ABCD. So we're not front run anything. We've definitely got higher on others, right? We've definitely got higher targets. Pretty much raid this zone. So we've hit this resistance. Don't expect it to be strong resistance again. So all we're saying is basically this to all-time highs. There's our next target. Go rate this, and if you rate this, that's when you'd be looking at for that 1.13, right? You have basically an 886, you have an 87 here. The reciprocal ratio of the 886 is the 1.13, right? So somewhere around 547.5 billion. Once you get above this, because I do think you go and hit that. But again, there's your key targets now, right? You've rejected off of resistance. You rejected off of your 12-month seller zone mid. Now you're trying to flip what was once resistance into support. If that is successful, you've got a thesis for why you should be taking this out. Very simple, right? And last but not least, two things else. We have total DeFi. It's not hit its target yet, just above front round of 1.618, right? You did hit the T2 zone, the T2 for this harmonic, right? 886, you can see that. Pretty much a perfect bat here. In terms of this, it's not a perfect bat as in the actual shape, perfect bat, but the 886 was perfect here, right? So firstly, with regards to that, your 1.13 targets here. For me right now, the highest target I've got is 221.36 billion for total DeFi. We front ran the 12-month seller zone low, 161.19 billion, which is basically a 1.618 target. So we hit the T2. There's a lot of resistance here. Like that's resistance, that's resistance. This is resistance, that's resistance. So now we're just expecting some sort of grind up like this, and then maybe we top out somewhere around here. Let's see. But now there is still lots of targets for this. So DeFi and your alts, basically, you can see they have way more room to go higher now. Right, even total 2, total others, total 3, total DeFi. These have way more room to actually go higher in terms of targets than Bitcoin does, because total 1 has hit its most extreme target. What that means is if you get above this, you literally have no key resistance, even in terms of wave structure. So Bitcoin could run way harder than we're thinking. But if we just chop around here and grind around here for now, like this, right? That's when you see your alts go absolutely crazy, basically. So that's what you're looking for. Last but not least, others dominance. We looked at this last week as well, right? We said we're at the range mid. Don't do anything stupid here. So look what happened. We went to the range mid, right there. We rejected, and the retest scenario. So what I said was we either get this or we get this for others dominance, right? If you want to enter alts, these are the two cues you're waiting for, or of course a flip of the actual mid. We didn't get a flip of the mid because we closed below the mid, right? If you would have put a midline down for this zone, you would have closed below. Swing failure pattern. So basically, this retest now is you confirming, yes, we are back within this range. If the retest is successful, you've got a cumulative structure going on others dominance. Why cumulative? You have your smiley face, right? Support, radon liquidity, reconfirmation of support, something like this. I'd be looking for way higher, way higher. So that would again correlate with your alts going absolutely crazy, especially alts not in your top 10, right? So you think, oh, I missed out on alts. Like realistically, if you look at this chart, you've not missed out on anything, right? Like, this is the first time we've shifted trend, because up until this point, if you're looking at the weekly, you were making lower highs and lower lows, right? Now you have your last lower high that led to the lower low being taken out, and you're putting a higher low in at the weekly VWAP, right? You rejected the weekly 200, but the weekly VWAP you're holding. As long as this holds, right, and you manage to maintain this, you're gonna go higher, right? And your alts are gonna pick up steam, just like they've been doing on this move up. So on this pullback, again, if you've been completely sidelined, don't keep thinking, oh, we're going to go lower, we're going to go lower. You see any coins you're interested in, just pull the trigger. Right? Widen your stops, manage your risk accordingly, but just pull the trigger. We're in an uptrending market still. That hasn't changed. Okay. Of course, we could see a bit lower on Bitcoin. I'm not saying we can't. That's why I'm not saying go all in. Ladder in. I've given you guys a laddering strategy plenty of times. Do whatever ratios you want. But don't be like, oh, the top might be in or anything. Because if you look at others dominance, there's nothing on this chart telling you old season, anything like that's over, right? If anything, it's telling you we're just getting started. Right? We've got a lot of room for growth on this still. So that is total others, right? So let me quickly check back to the chat real quick now. Quickly take a look. Yeah, I'll need to quickly look at that last. Another 30-week range. Wait, can you hear me now, Blue?
Yeah, I agree with that sentiment entirely, Weatherman. At the end of the day, pullbacks are natural in an uptrending market. and it's very easy for people to become a bit hesitant, right, when we do have a pullback.
Yeah.
But we trade based on technical levels and fundamental narrative as well, and both of those are still bullish.
Hmm.
So yeah, I think it's near Christmas time. Usually in the markets at this time, we see lower volatility. We see people taking profits, and yeah, I still think we're gonna have a very bullish run into January and February.
Yeah, for sure, bro. Yeah, 100% agree with that, for sure. Okay, let me just catch up with the chat here. Those things don't work, scam system. Yeah. uh,
Robert said he's in the shower currently.
Someone's in the shower. I'm honored, mate.
Bro, he's locked in. He is locked in, mate. Uh,
Pixar, it didn't happen, Itachi. Yeah, I'll upload the recording, Doctor, so you can see it at your own leisure.
but man, I'm curious, in this current market conditions, if you were to look for scalp trades, are you targeting shorts or longs?
With scalp trades, I'd be depends on which side of the range we're in. For me, when I scalp, normally I'm literally doing off confirmation. So if I have like a level I've marked out as resistance, and I see on, let's say for me on scalping is 3 minute entry models. So on the hourly, if I see like a breakout or I see us trying to get above, and then on the lower time frame, I see, let's say we have this resistance and we see SFPs, right? And on the 3 minutes we keep closing below the mid. I'll just take a scalp to the downside because in that time frame sellers are showing the edge. If you flip, I'll
Yeah.
take a scalp long because you're expecting a quick reaction off that because buyers have showed an edge. So for me, it depends entirely on what confirmation do you get at your significant level that you've got marked on.
Yeah, makes sense. For me, I tend to look for more swing trades, even if they are obviously scalp to start off with and
Yeah,
evolve into swings. So I like to really trade either bottom range lows or top range
top
highs.
range highs. Yeah, yeah, exactly, bro. That makes sense. Yeah. With scalping, one thing people do wrong is they think you need to every 3 minute candle you need to chase it. That's not how you do it. Even if you're scalping, have your key levels set. Only take trades on those key levels. Just because
Mm.
you've gone on a lower time frame doesn't mean the price action at a random level has all of a sudden become more significant, right? You're still reading noise. It doesn't matter. So, like Caleb said, as significant levels, right, like range highs, range lows, those are where you're gonna get your best RR trades. It doesn't make sense to do anywhere else. Um, but okay, let me just anything else? Nope. Oh, the Hawk Thrust. Did you see that CoffeeZilla video, bro? That was funny as hell.
No, I haven't watched it, but I saw some memes on Twitter. It was like the Hawk Tour girl has been asleep for
Yeah,
72 hours.
yeah,
Someone made a post and she was dancing on Instagram. I was
yeah,
like, oh my gosh, that we made the wrong chick famous, bro.
yeah, yeah, for sure, bro. She was a Jewish plant. That's all it was.
Oh.
Right, let's take a look. We have right. Okay, let's go to our top 10 guys, and then look at some chart requests. So first and foremost,
Yeah, go on.
what are you gonna say, bro? Sorry.
I was just gonna say, Wes said Salami doesn't know what it wants to do. I'll send my chart for Solana. It's quite clear. We had a demand zone of 206. That's where I had one of my previous entries. I think
Yeah,
Neil called a lot there. We filled there. Rejected resistance at around 218. Solana, I'm still very bullish on. I've got a lot of this coin on spot, and
yeah,
I do
yeah,
think
bro.
it's going higher. So it is a very good coin to bid at range lows, Wes.
We
And even if you
reached.
were to take a short position on this, right, you could have easily taken a short position with a 5 to 10% stop loss, and you could have shorted it anywhere on the way down, and you wouldn't have got stopped out.
Yeah,
So, like Trevor was saying, you don't need to wait for the perfect limit order. You could just CMP if you're using credit risk management.
yeah, yeah, very much so. You're just retesting, like you said. Yeah, key zone, and nothing, no technical damage has been done. Again, just guys, just look at the higher time frame. That's what you're focused on. Look on the weekly, you realize all we're doing. There's an area here, right? Weekly seller zone area where sellers were active on the weekly. Even if I get rid of this, you've just retested that area where sellers were active in the past, right? So if I just zoom in here, you can see in the past, buyers couldn't close any candle bodies within this zone. Now what you're saying is, for now, sellers are not managing to do so. That is a clear narrative flip. Bearish, bullish, right? So, very
Mm.
if you start closing below this, sure, then maybe layer out and just add back in when you go back above. But as long as you're holding this, there's nothing wrong. You could get some deeper
Exactly.
wicks to take this, but ultimately, on the higher time frame, you're probably gonna scam wick and close above this and go higher anyway.
Yeah, exactly. And even if you were to base it off of the wick off or the candle close for all-time high in the 2021 run, we just rejected that all-time high, right?
Yeah, yeah, right there. You just rate it. That's it. You don't expect a. It's just normal pullback, right? At the end of the day, you
Mm.
literally take an all-time high. It's a normal pullback. Your structure's not been damaged at all. This is just a retest for now. So on the higher time frame, bro, it's very clear what Solana wants to do is retest this successfully. That's it. If this retests, you go higher. If you want to expand, you don't want to get stopped out, just increase your size because this is still valid right here. Right, you can see resistance, 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 right? You can take this as a weekly supply zone right there. There you go, right? Impulse up, consolidate, impulse back down. However, you look at it, this is the range. If you, especially if you're going spot, this is the range you're looking to absorb, right? Don't go all in here so that by the time you go here, you're liquidated. Position yourself so that should you go a bit deeper, you've still got some capital to add. Because if the weekly closes above, you can just size up some more based on that confirmation, right? But the weekly hasn't closed yet. Over the next 5 days, we could have one deeper pullback before we go higher. This is the zone you're working with, ultimately, right here on Solana. But okay, let's look at Bitcoin. So again, just like with Total One, what Bitcoin did, if you look at the weekly, let me get rid of the intersections first. 1 second. Um, hang on. There we go. What Bitcoin's done, right? Firstly, if you look at the weekly, weekly closed below the AB equals CD 2.24. The scam system strikes again, right? So again, this was given way in advance. Um, we have SFP and then grinding up, but still not managing to close candle bodies above the AB equals CD 2.24, right? 101,369. You close below it. The weekly closed below this, so this is the scalp I personally took, right? As soon as the weekly closed, you look at the 1 hour and you realize that was also a 1 hour rejection, followed by a series of lower highs, right? You have hourly supply zone there. So in terms of confluence, you have this here, right? This to this, right there. You have hourly supply zone. You have the AB equals CD 2.24. You close below, so I just pull the trigger on a scalp here, right? Um, but again, technical damage hasn't been done to the chart on the higher time frame, right? Look, your internal liquidity, nothing's been taken out, right? You're still within your weekly range you've been in. The only time you'd say, okay, we've got some serious damage done to the chart is realistically if you broke down and then reconfirm this to be resistance, then you'd be saying, okay, you've got some sort of distributive structure going on, and then I'd be targeting back towards, let's say, the 70k range if that happened, right? But until that happens, there's nothing serious that's been done. Only like local damage, basically, right? It's been done because on the daily now, what you had was you had a area, you had a daily seller zone, radon liquidity. So what you don't want to see now, locally speaking, is you don't want to see a move back up and then a SFP here. If you do that, again, locally speaking on the daily, you're going to put in distributive structure, right? You're going to put in the inverted smiley face. And if that happens, then I'll be looking for a flush of all of these lows. Maybe go and flush, like the 89k level, right? That'd be nice. If you did get that, something like this. And then reclaim this as support and then go higher. Something like that is what I'd be looking for, right? But again, for this to happen, I'd want to see that happening first. Otherwise, you've kind of just gone down without retesting this on the daily. You've already had a lower time frame retest, right? If I show you the 4 hours, it was a nasty wick right there, right? On the 4 hours now, the breakdown's already been retested, but that was a retest during this daily candle, right? I want to see actual retest now that this daily candle's closed. I want to see a follow through with another daily candle and similar price action coming in to be way more confident in the structure that's been developing currently. So if that happens, again, I'd be wanting to see a flush, right? So now we'll be looking for, if this happens, I'd be wanting to see something like this. Put in a bigger cumulative structure, now a proper smiley face around these range extremes, and then just go higher again. And then maybe take out the 2.618, around the 109, 110, and then have a deeper flush perhaps, right? Have that deeper flush, and then grind up towards a higher target. Something like that would be nice to see if we got it, right? I don't know if we get that. This is now just, of course, this is just speculation on my part, right? Price action can do whatever it wants. All we can do is sort of have like a rough outline of what we think it could do. That's what I'm trying to say here, right? But for now, just go on your daily, right? If you wanted to know how I'm putting this up, go on the daily. Look at this structure here. That wick, that's your seller zone. That's the area where sellers took control back from the buyers during that move up in the 22nd of November 2024. Just draw that zone out, right? You try to flip that to support, you couldn't hold it. If you flip that back into resistance, you're reconfirming what was once resistance is resistance. You're reconfirming that this is deviation. And more importantly, you're reconfirming that if I show you the aggressive buys going in, you're reconfirming that there are indeed trap traders up in this area. And basically what we're saying, let's force them to cover lower if they didn't already cover in this big dump down, is what we're saying, right? But again, BTC, nothing new to update because no technical damage has been done to the chart since last week's stream, right? That's it. All we've done is now have a breakdown. We could, for all you know, the retest could be something like this, right? So let's see what happens on that retest when we do eventually get it. So that is Bitcoin. Let's look next at Ethereum. Also absolutely dying. You love to see it. Market wide flush. Okay. Let's look at Ethereum. I have this one right over here. So Ethereum, key inflection area high. So the whole reason we bounced is because we kept holding this key inflection area. Now we've gone and we've rejected the high of this key inflection area, 4028.31. You couldn't close above. On the weekly, aggressive buying is taking place, but you couldn't get above resistance. To me, that is immediately a sign of absorption, right? You're saying, okay, aggressive longs are coming in, right? Serious aggressive longs are coming in. And in fact, if we take a different approach to this, let's see what this looks like on the footprint, right? Let's see how much aggressive longs were actually coming in. So I'm going to open up Ethereum, Bybit or Binance. Let's do Bybit for now. Let's look at Ethereum, right? So it was this level right over here. You can see on the 4 hours firstly, right? You can see the amount of hang on, let me just do this so I know where we are. Let me put a line down. There we go. And then after that, I'll drop down to the 3. Let's look at what was happening once we actually got there, right? So this is our key inflection area is at let's see, what was it at? It's at 4028.31. So right, just for the sake of argument, that's on the index chart, but let's just move this to 4028.31. That is all the way around here. We obviously went a bit higher, but 4028.31. So somewhere around there, basically, right? That's our key inflection area right over there. And if we go over here, see if we can spot any other key levels, we had this. Did it get taken? Yes, it did, right? 4090.92. So we have a very clear zone between 4028.31 and 4090.92, right? So the other one we're looking at is 4090.92. So basically somewhere around here. I'll just put it there for now. So this is the clear zone we're looking at on the higher time frame. We can see the rejection that's already happened here. But what do we see happening once we actually go to this level, right? If we take a look at the footprint, why is it not showing up? 1 second. Is it too much data? Okay, we're gonna have to go on something like the 5 minutes. It should be there on the 5. Nope. Okay, let's go 15. It's much you'll see absorption and stuff basically going on much cleaner on the lower time frame, but the problem is the lower time frame the data doesn't stay for long, right? Since new candles are being printed at all times. But even on the higher time frame, I can give an example of what is going on. If you take a look, right, initial not liquidated, total liquidation will be 40.47 million. Okay, if you look at our first initial level, 4028, you blasted through it, right? Look, high volume, aggressive buying coming in. The aggressive buys are being rewarded. How do we know that? Well, your high volume node is staying with the price, right? Your high volume node is staying with the price. The delta is extremely positive. There's no aggressive sells coming in. It's all aggressive buys coming in at the top. People are clearly horny for a breakout from this level, right? Then you get your breakout, you move up, right? You get the retest of the area. The retest is followed by loads of market sells coming in, aggressive sellers, but those aggressive sellers are not being rewarded. Again, how do we know that? Because even though we have a shit ton of market shorts coming in, right, even though we have a absolute ton of market shorts coming in, the follow through candles can never stay below, right? The high volume nodes keep pushing this higher and higher and higher. Your aggressive buyers keep pushing this higher and higher and higher. You see where the ask volume is coming in, right? It's at the top of each candle. So then what happens? Okay, you confirm the support, you break out, right? And then you go and you raid your all-time highs, and the raid happened right over here. What do you see happens at the raid? Again, aggressive buyers are stepping in, right? Take a look. The move up to the raid, all aggressive buyers, right? Ask versus sell, that's more than a 3x, more than a 3x, more than a 3x. High volume node to the upside, right? Massive delta. And then you get your candle that actually hits the all-time high. What do you see? Aggressive buyers, no aggressive selling going on, right? So no market shorts, no aggressive selling. Aggressive buying going on, a lot of aggressive buying going on. And even though there is a lot of aggressive buying going on, and if you take a look at where the aggro buying is actually going on, it's going on literally at the peak. You can see firstly, you closed below your stacked imbalances, right? You closed below the level of all that aggressive buying, which immediately tells you these people are offside. Secondly, you closed below your high volume node, right? During this candle, this is where the most volume was transacted. You closed below that as well. You didn't close above like in this bullish scenario. You closed below. Right, and last but not least, you got to think to yourself, okay, we have all of this aggressive buying going on. How come the candle is red? What is that telling us, right? That is telling us that, okay, even though there is a shit ton of aggressive buying going on, clearly that aggressive buying is not enough to absorb the supply overhang in this area. Where does that supply come from? Well, just think about the market. What is the market? The market is a two-way auction. For every buyer, there has to be a seller, right? So these aggressive buyers, they're going straight into the asks of passive sellers, okay? Meaning the market longs were not strong enough to absorb the supply from the limit shorts in this area. We see a very, very clear sign of buyer absorption going on, right? And these are the kind of things I'm looking for. Firstly, to validate market structure. Secondly, validate breakdowns or breakouts. Thirdly, look for trap traders and then take a trade, especially on the lower time frame when I'm scalping based off this, right? This is what I'm looking for. And then after that, what you do see, follow through, right? Massive negative candles. Again, aggressive buying just not being rewarded. Look where your high volume candle is. All the way down here, you close below again, right? And then it's just a rinse and repeat of that all the way down here till you take out stacked imbalances from that buy side, i.e. the ask side from history, right? And then eventually what do? Go back to our key inflection area, right? So go back to this level here. So even though this looks like a lot of action, remember this is on a lower time frame, right? Go back and then you have the breakdown and then the retest. Again, what do you see happening at the retest, right? If you zoom in, at the retest, you can see again, loads of aggressive buying going on, right? Look, aggressive, no market shorts, all aggressive buys going on at just above, just below the actual key area. Loads of it happen at the key area itself. Positive delta on the candle, meaning there were way more aggressive buys than sells during this candle. Right, what we're saying is in the ETH USDT chart, right, on Bybit, during this 15-minute candle, we had 1.2 thousand more buys than sells by volume, right? That is a significant amount, and yet, even in the face of all that, you still have a massive swing failure pattern and a close below. Again, telltale sign of absorption, right? Buys are being absorbed. What this is telling you, and this is going to be, obviously this is a 15-minute candle. I'm looking at this on the 1 minute, the 3 minute, right? So when you're scalping, you want to be as tight as possible. This is way too wide of a risk for me to take a scalp, right? I don't normally take scalp on entries on 15. On the 15, I'm sizing up on scalps normally. My entry model is between 1 to 5 minutes, normally my preferred being 3. Do we have enough data to see this on the 3? One sec, let me take a look. Please. We might have, oh yeah, we do. Great. Okay, let's take a look at it on the 3 then. So on the higher time frame for you, for the low, I'll say higher time frame for scalping, we can very clearly see that absorption has taken place. We can see the same on the 3 as well. And if I went to the 1, you'd see the same, right? Look, massive buy pressure coming in, right? So we have all of this massive buy volume coming in, taking us right underneath resistance. And then we have an even more crazy amount of buyers stepping in here, aggressive buyers, stacked imbalance, meaning the buying volume vastly outweighs the selling volume. Massive positive delta again, right? But you see how your candle closed, right? Below your high volume node, below your stacked imbalances, and then below, your candle closed red, right? You closed below your open. So what you're saying is, look, even though the aggressive buyers were clearly in control, the they're going into a sell wall basically, right? And there is not enough demand from the aggressive buys to absorb all the supply from that sell wall, is what we're saying, right? And then that was your confirmation of this happening, right? That closed below 40.28. So you didn't have to basically, you didn't need to scalp this right at top. You don't need to. As long as you have some key areas, you just read the price action around those key areas. And reading price action, this is all it is, right? Right now, I'm using footprint charts to read them. You can do that just with candlesticks as well, right? So for example, if we were to look at this on the 3 minutes, you'd get a very clear indication of what was going on. You rated all-time highs. Market long started to come in, but if you take a look, you front ran, right? Market longs front ran the key inflection area top. This area used to be support slash resistance. You have a buyer zone, you have a seller zone in this area, just like that, right? Clearly support resistance on the lower time frame. So you front ran this level, right? Even with, you don't need footprint charts, right? Rejected off the mid and closed below. Therefore, you're saying lower. You have aggressive buys coming in. There's trap traders, right? And then so you don't need footprint charts. That's just for extra confluence, right? But that's what reading price action is all about, right? And this is why I don't typically set limits. I'm more of a let's see what happens before I enter type of person when it comes to trading. That confirmation you're getting, buyers and sellers telling you what is going on, that is way more powerful than for an actual confirmed entry model, right? And then that's one key level. And then you take a trade here. You don't care what's happening over here, right? You don't care what's happening over here, over here, over here, here. These are all random places. You don't care. Next area you care, right there. That's my next significant level. So when you see this being flipped to support, you take along. Nothing's been flipped to support. There's no entry models. You see that being used as resistance, however, you have inverted smiley face coming in, aggressive buyers coming in, but closes below the level, somewhere where you can manage your risk. Because what you're saying is now, if you take a short here, right, you take a short down over here, your invalidation is clear. You reclaim this line, you cut. Very, very simple. You reclaim this line, you reclaim this 3-minute order block, you cut, right? But look, you hit the mid, you reject it for now. Your risk to reward is much cleaner to the downside. So then your thesis is going to be to the downside, not to the upside, right? And then again, if you get above this, you've hardly lost anything. You cut because above this, you're not interested. You're saying we can move up higher. And then if you have other key levels up there, then you look for entries up there, right? But what's happening here, here, here? Many people spend all their days, like, literally 8 hours, 10 hours a day glued in front of your screen, trying to figure out what's going on in these random moments. It does not matter. You shouldn't be given a single flying fuck what's happening over here, right? It does not matter. What matters is add key levels, and that's it. Because that is where price action is significant. This determines, if buyers take control here, they determine we go higher. If sellers take control here, they determine we definitely go lower, right? If buyers take control here, doesn't necessarily mean we're going to go higher, right? Because key support's down here. If sellers take control here, doesn't necessarily mean we're going to go lower, because there could be resistance above you could wake up to, right? So ignore what happens. Just basically treat everything that happens outside of your significant area as noise. Don't take it seriously. Don't close your positions based on some random candle happening over here when your key levels haven't even been hit. Just focus on your significant areas and what kind of price action, more importantly, do you get at your significant areas. That's it, right? Sorry, I know went a bit off tangent there, but just wanted to give you guys a different perspective. So back to this again. Anyway, Ethereum still within your key inflection area, nothing bearish yet, right? As long as you're above 3581, you're eventually going to be looking for higher, because you're saying you're out of this range now, right? As long as you're out of this range, you're saying you're at the range lows of this higher range. If that's the case, eventually you're looking for that range highs to get taken. Okay. This was very bullish on ETH. You literally held your weekly 200. I can see that. That's one thing I didn't consider, because every time I talked about ETH before, I never actually turned the 200 MA on. I only realized the other day, but we had 200 MA confluence with our key level, right? So that was very, very beautiful. Let me check the chat real quick. Okay, 4K, let's take a look. Right. You're in the office. Yeah, bro. It was a really nice entry, but you get way more. Don't worry, you'll get way more entries. I do think we get some retests. I hope we get some retests anyway before some bigger flushes down. But that is Ethereum. Right? Again, above 3581, nothing to worry about. If you go below 3581, that is when you should be worried, because then potential move down towards, let's say, just 3000s, 3023, 3030, basically somewhere around that area is possible. If you lose 3581, you lose that, another $500 lost in value, in my opinion. You go down towards the 3K range, which again wouldn't be bearish because if you look at the structure, initial supports, radar liquidity, and in this case, it'd actually be a very, very nice head and shoulders coming in at range mid. That'd give you a really, really nice breakout target, right? So if we do get 3,000 needs, honestly, lucky day. I'm going to be loading up on both Ethereum. Again, I've not updated the January bids yet, but the bids I gave started this year. Averages, we've not touched our average, right? We just literally just hold in. If I see a clean opportunity to size up, I'll do one final size up before this thing goes parabolic. But I'll be loading up on both Ethereum and Ethereum against Bitcoin. Should we go down over here? So that's ETH. We've looked at Sol, right? Solana. You can look at Solana in terms of key inflection areas as well. If I do that, right? You're holding your key inflection area. Not again, key inflection area mids being retested successfully. The low of the key inflection area is being held. No reason to be bearish as long as we're holding this. If we lose this, then we're saying it is very possible that we go down towards, in fact, this here. We could go down towards 171 if we lose 202.7, right? If we do that, then I'd put my target. If you want to set some sting bids now, these are the levels you do at, right? 170, and even then I won't do it with proper position sizing. Never limit with full size. Just the way I do it. Never limit with full size, because if it blasts through your limit, then you're just, that's the risk you're taking. If it blasts through your limit, then you're getting stopped out for no reason, basically. Right, so never limit with full size. Is much, in my opinion, that's not financial advice, of course, but in my opinion, limit with whatever size you're happy with, and then manually add on actual confirmations, right? But again, if you lose 202.7 on Solana, then I'd be targeting these lows here. 171.4 would be your next target. Very simple on Sol. But as long as you keep holding this, the 309.61 target still hasn't been hit, right? Still valid. We want to see 236.95k reclaimed first, of course, but your ABCD 2.0 is at 309.61. We're nowhere near that. Right, so another impulse up is very, very possible on Solana. Maybe something like this, right? Let's take a look at what happens though. So that's Sol. Okay, so let's look at Injective next. Nice pullback. There we go. If you missed out on Inj, and we come back and look at Inj charts in a month again, and this is all the way up here, and you still tell me, oh, I didn't get to buy, I hope you stub your toe or some shit, right? Because this is a great chance for you to ladder into Inj. Look, this could not get any better, okay? This could not get any better. Look, please do not just be completely sidelined thinking, oh, I'm going to buy at that perfect level. You're not going to time the market. There is no perfect level. Look, Inj you can literally ladder into. If you lose this grey box, just cut it, right? But you can ladder in here. You can ladder in. And if you go to this lower box, you see raids of it and closes above, you can ladder in some more. And if you see closes above on the weekly, you can just size up based on that. But look, we've taken out our trend. We're putting in a higher low. We're in an uptrend, right? We've gone back into an uptrend on Injective. Do not be silent on this when you get an opportunity like this, okay? If you're in nothing, here is one staring right in your face. In my opinion, peak bull market euphoria, I still strongly believe Injective could get to triple digits, okay? So this is something this is my top 10. I've been very vocal about this, right? And if no one's in, again, you're getting a great opportunity right now. Very,
You got
very
to think
nice opportunity.
it was only earlier this year, right? Q2 when it was trading at $50, which
Yeah,
is literally a 2x of current market price.
yeah,
And if
exactly,
you look
bro.
at market structure on a high time frame since November, it's still bullish, right?
Yeah,
We held that support level 24.6 I had mapped out.
yeah,
Um, so yeah, it's definitely a good bidding range.
yeah, for sure, bro. Injective looks really, really good. Very clear invalidations, very clear entry manage. Yeah, risk management model is very, very clear. Very, very. You enter here, you just literally target. Okay, you've taken this high out. Literally, your next target is $52, guys. These are there for when I want to see lower time frame chop occurring. But in terms of market structure, you've taken out this liquidity. Either you're saying we're going to break all market structure and take this liquidity out, which I don't see happening for no reason. So the more logical choice is let's go and take out 52.982 next. You don't have any other external liquidity on the higher time frame. Okay, so this move up is what you're aiming for in Injective next. Okay, so Injective looks absolutely phenomenal. If you guys are sidelined and looking for something to bid, get some spot Inj, just hold it. Right, you lose the grey box, cut it. Very simple. Right, otherwise DCA. So that is injective. Looks again beautiful. Look, you're literally flipping previous all-time highs into support, right? And again, a cumulative structure is presenting itself currently speaking. So this is a beautiful chart, absolutely beautiful chart. And so, like I said, this is somewhere I am going to fully size up, right? So I'm going to wait for this 3-day to close tonight, and I've got 20% left to put into inch, right? Again, if you guys remember, my laddering in strategy is 20, 40, 40, right? Do whatever ratios you want, right? So I've done a slightly different ratios to this. I just do 20, 40, 40 when I explain because it's easier. It's easy numbers to work with. 20% for CMP, we talked about this all the way in September, right? For those of you saying, where did you do 20%? Check the harmonic setup video. Every week on stream, I've been saying, my top 10, I'm getting into them, right? At these key levels. So you had a completed harmonic. We were looking at this. 40% for DCAs, right? Or if local resistance get flipped to support, or if, you hit your levels you consider to be DCAs, you just ladder in with that slowly, and you leave your final allocation for when the trend shift occurs, right? When does the trend shift occur? When your last lower high that led to the lower low gets taken out. Here on the daily, or the 3-day rather, and actually it's the same on the weekly as well. That has been taken out, right? And now you're putting a higher low in. You could go a bit deeper, it does not matter, right? So this last 20%, after tonight's close, I'm going to be laddering in slowly with that, right? And after that, I'll be fully positioned for inch. My average is literally going to be somewhere around here. We're going to be ready to just take this up. But that is injective, right? Very, very easy to manage areas for injective here. So we looked at okay, let's look at Vanry next. Now in terms of Vanry, again, another one that's giving you a pullback, right? This has already had a crazy reaction. You front ran this retest level. It'd have been beautiful if they did. That is a nasty, nasty diabolical work from the market maker. I wish we'd got that retest. That'd have been very clean. Now that's just going to be something we could raid. It's going to be like an overhang. Never mind, right? Vanry, another one, you've already switched trends, right? So your last lower high that led to the lower low has been taken out. You're now putting a higher low in, right? So again, 3-day close later tonight. I'm going to be allocating my final 20% into all of my spot bags, and then just holding it, right? Just holding it. 200-day MA on the daily, just about front trying it. So we could get one more spike down, sure, right? But as long as you're holding this box, it does not matter. Old range being retested as support, basically, all that's happening. Even if it goes from here, that's still bullish. Why? Because you're saying this front run in that case, what you'd be telling yourself is, we're so bullish, buyers aren't even letting the sellers come down to retest this area. They're absorbing all that supply before it even gets there. And that is a bullish scenario. So then on Vanry next, you'll be looking at, well, the B point, right? That is your next target. You don't have any other targets. This big cluster here, the B point, then the C, then the A. Very, very simple. And if you look at Vanry in terms of fibs here, right, what we've done, so we can see the 886 bottom, right? We rejected off the 618 basically, right? That's what we did. We rejected off the 618 for now. You're holding your weekly 200 on Vanry. It's starting to curl down a bit, does not matter. As long as you're above this, it's going to curl up as soon as the price goes green again, right? So you have shifted your structure on Vanry to bullish, locally speaking. Your last lower high that led to the lower low has been taken out. A high low is being attempted, right? If that's successful, then you just go and just look at your external liquidity again. Those are your targets on Vanry, right? So Vanry also looks ready to go. I've got my final allocations left to size up on. And then so now, when these high lows come in, basically what you're saying is, if you did follow my laddering strategy, you're going to be fully positioned at the right time of the market, right? You still had some cash left over to use the dips, right? Because this big flush is going to be your first high low. After this high low does get put in and we go higher, don't expect any pullbacks soon, right? Expect these higher targets to get taken out before any significant pullbacks come in, okay? So then they'll be basically, that's why I gave that laddering strategy, right? You follow this, have a CMP allocation, DCA for lower / local resistance support, and then a trend shift. You're always going to make sure you're only fully allocated once you've got confirmation the trend is with you as well, right? So you won't be basically, trying to take a full play before the trend's actually confirmed it's reversed, right? So that is Vanry. We looked at ETH, we looked at BTC. Let's look at Aptos. Aptos, that area we were talking about, grey and red box, has been retested and you closed above your actual 1.13. Again, as long as this holds on Aptos, you're fine. This is a raid on these liquidities, right? So if this keeps holding on Aptos, then higher targets again, right? You have a new range right over here. There's deviation of the range high, there's deviation of the range low. As long as this range is now respected, there's no reason to be, aiming for, let's say $8 Aptos again, right? So that's been hit at $10. And for now, what we're saying is your actual original resistance, what was on support, is still support. You can see support in the past, resistance in the past. Same thing here, very key level. And now add on to the fact you now have a bearish harmonic 1.13 that lined up there. You flipping this support is just saying, okay, a bearish harmonic has been flipped bullish, right? After a bullish 5-0 as well. So that'd be your next proper high low that comes in, let's say, before you go and make a new range probably on Aptos. Right. So again, all of these spot low leverage swings, very low leverage. Again, with leverage, manage your risk, manage your position size, especially with spot. So easy to manage your risk. If you close below this red box, right, you properly close below it, you can cut it and just add again when you get back above. On spot, you're going to be risking nothing again, especially if you ladder in 7%. That is chump change for spot, right? Especially if you're laddering in. So easy to manage risks here, very very easy, right? That is Aptos. So we looked at injective, Sol, Vanry, BTC. Wait, hang on. Vanry, Sol, injective, ETH, BTC. Yeah.
Yeah, that's really good advice, brother. Going back to what you were saying about laddering in, like at the end of the day, guys, a lot of you should be trading risk to reward based systems. What I personally use for my leverage account is I'll do 10x leverage and a 10% stop loss. So I'm only ever risking 100% of the margin in which I allocate.
Yeah.
And then I'm aiming for 2 to 3 risk to reward per trade.
Yeah. Yeah, bro. That's a solid strategy. Yeah, guys, have a risk to reward. Have a strategy for you for that makes sense for your ports. Don't go into a trade where your risk is like 10% and your reward is 5%, right? That doesn't make sense. Look for opportunities where your RR is good, right? Manage your emotions, manage your discipline at those significant areas. But realistically, right, let me just give you a few bullet points. Learn to find significant areas. Learn to not pull the trigger until your significant areas get hit, right? First two steps. That should be very, very simple. After that, learn to manage your emotions once you get to your significant areas, right? That's going to be the hardest part. That's going to be like a personal growth type of shit, right? That's going to depend up to you. But once you actually get to your significant areas and all you're going to be doing, reading the price action there. Once one side shows you an edge, you get a high risk to reward setup presented, you pull the trigger. If you get stopped, you get stopped, but it's not because you took a shit trade. The trade just went against you, right? Not every trade's going to go your way. If you were to now take for example, right? If you went over here and you were to mark along this Y candle, right, with your full port, and you went up here, unless you made 10k, I'm not going to give you compliments. I'm not going to call you a good trader, right? Because that was a shit trade that you took. You took a gamble and it paid out. But let's say you were someone who tried to take a trade here, but then you got stopped out before you moved up. Even though you got stopped out, that is a much better trade than this, right? This is a coin flip that happened to play out. This is a trade which you can repeat on a day-to-day basis, on a week-to-week basis, throughout the rest of your life, right? And over time, you keep finding these significant levels, reading price action. They're only entering when one side shows you an edge, right? Managing your risk, looking for high risk-to-reward setups, 5 bullet points. Profitability is going to be it's going to be inevitable byproduct. You can't tell me you've hit 20 different trades and every 20 different ones hit stop loss. That either means you're the most unlucky person in the world, or there's something fundamentally wrong with your system, right? So hopefully no one here has a system that's making them hit stops 20 times in a row or something like this, 10 times in a row, right? That should not be happening. So you find good good risk to reward trades at significant areas and only pull the trigger when a side shows you an edge. You do that over time. That is literally the blueprint. That's the blueprint. There's nothing complicated. Everything apart from that's just smokes and mirrors, right? You call this things this. You have this system. You have that system. Ultimately, you're just trying to figure out key levels for you to manage your risk around. That's it, right? So, like Kelly was saying, just have a strategy. Just have a strategy. If you can manage your risk, if the risk to reward is good, just pull the trigger. There's never going to be, you're never going to find the perfect entry. You're never going to find the perfect level. There's always going to be some sort of fuckery going on. The best you can do is just manage your emotions, manage your risk. That's it, right? You see this here now. You're scared. What if we go lower, right? You see this here. Everyone's buying, right? Which is why, let me show you market psychology 101. Let me just go into Bitcoin real quick.
Yeah.
Let me turn on market bubbles, right? What you will see is, right, every green dot here, that's aggressive market buying, okay? Every red dot, that's aggressive market selling. What do you notice? You notice all the aggressive market sells are coming in at the lows. All the aggressive market longs are coming in at the highs because majority of the people that trade do not have a proper plan. Logically speaking, now we know aggressive sells should be coming up here, aggressive buys should be coming in down over here, but that's not the case. You go to any asset, you go to any time frame, right? So this is BTC, right? Let's go to Ethereum. Again, where's the aggressive sells coming in? Where are the aggressive buys coming in, right? Aggressive buys are coming in at resistance. Aggressive sells are coming in at support. This is just market psychology 101, right? People are scared of a breakdown. They keep lowering their targets. They keep shorting. They keep taking trades at ridiculous areas where it doesn't make sense to. People are, that's fearful, right? This is fearful. That's what happens in a bear market. And this now is euphoria. You shouldn't be longing here. You should be longing down here. You shouldn't be shorting. You shouldn't be shorting here. You should be longing down here. Right? You shouldn't be longing here. You should be shorting here. But what do you see? You do not see these green bubbles popping down here, right? Because there's so much more aggressive sells than buys occurring at the lows, and there's so much more aggressive buys than sells appearing at the highs, right? Aggressive buyers trying to push price, aggressive sellers trying to push price. Don't be a part of these green bubble. Okay, that's what I'll tell you, because you should be very clear why. Look, you short here, you're trapped. You long here, you're trapped, right? Have a system, go against your emotions, go against the grain, right? Have a system that makes sense to you. Even if the rest of the market's fearful, if your system's telling you you're at a key area, I can see absorption going on, right? The key area is being held as support, no kind of body closes below resistance, then that's where you build that long. And again, you're at a key area. Entire market's bullish, they're screaming for 10k ETH, but you see the data's just not backing it up. There's absorption going on of buyers now. You hedge a short, right? Take some profits. So just have a system in place, right? Have a system, good RR opportunity, and then over time, profitability will be a byproduct. It's inevitable. Just like a quick tip. But let's see, we've looked at Aptos. Okay, so next let's look at AVAX. I messed my charts up the other day because I accidentally clicked that button up there. That just completely ruined the order at which I had things. So I'm going to have to find these myself. AVAX next. Again, beautiful retest on AVAX. Look, aggressive buys coming in. High volume buy activity. You do not really see aggressive buying coming in down over here, right? The majority of it's coming in, again, after the moves happened. Because most people aren't in the markets here. Right? They're not looking for it. But they get that FOMO, right? And FOMO is your number one reason why you get these massive moves up, because people is just market buying and market buying. But again, as long as you hold this grey box on AVAX, everything is fine. Your last lower high that led to the lower low has been taken out. You're now looking for that weekly high low to come in. So you're looking for that weekly structure shift. Again, 20% is going to be deployed when that weekly high low comes in. The 3-day close is here. I might deploy some of that 20% here. If we go lower, I'll deploy the rest a bit lower, right? But AVAX, this looks beautiful. Again, I'm not going to go over why the AVAX chart looks nice. I do this every stream. You guys know this is one of my favorite setups that I've actually talked about all this time. AVAX 4-year wave structure was so clean, right? We haven't hit any targets yet, right? Your first target is basically the top of this T2/75.50. Since you've already hit this low, this high here, go rate this somewhere here, chop out some more. Your next target is triple digit AVAX. And if you guys remember me saying, like even back in September, one day, we're gonna be in the market like a few months down the line, right? When the bull market is in full swing, and all these coins are gonna be up, right? Injective's gonna be 60, 70, triple digits. AVAX gonna be triple digits, and I was saying someone's gonna come in and they'll be like, oh, can you look for an entry on AVAX when AVAX are triple dollars, right? Triple digits, sorry. It's gonna happen. Okay, AVAX is gonna go to triple digits, in my opinion. There's gonna be the streams are gonna be way more packed, right? Because more and more people are gonna be joining once the market gets more and more euphoric. We're gonna need shit like restreams and stuff, right? And then people are gonna be asking me to look for entries on AVAX at 100, and it's an inevitable byproduct of the FOMO coming in, right? Any entry I give there, none of you guys should be taking, because you should already be positioned from down here, right? We sell over here. We don't enter over here. This is TP targets, okay? But that is AVAX. Again, looks great. Above this grey box, you have nothing to fear, right? What was once resistance and support, in this case, a weekly fair value gap, mitigator liquidity pocket, has been flipped to support, right? You're saying bearish liquidity is being used bullishly, That is a bullish thesis for us to go higher off. So let's see how the weekly closes, how the 3-day closes and stuff, and then we'll take it from there. 10 hours left still for this 3-day to close. But yeah, many alts are giving us very nice entry opportunities right now, guys. Very, very nice, right? So if you're completely sidelined, please consider deploying some. Not financial advice, just you know, I would hate for us to then just reverse from this, right? Your bloody $20 target AVAX doesn't get hit, and AVAX runs to triple digits before you get 20 or something like this. You're going to be kicking yourself. Okay. This is one thing that always happens. The more we go up, the higher people shift their targets. The more lower we go, the lower people shift their targets. It's inevitable. Just stick to your key levels. Don't shift them. But that is AVAX. Okay, what else do we have? We have Say and Sui and Ondo, right? So that would round out our top 10. So Say, I've not actually looked at the Say chart. Let's see what we got. Ooh, that is beautiful. Okay, so our original Say entries from down over here, right? If you haven't sized up on that, then we're getting a very, very good opportunity to do so right over here. Trend shift has already occurred on Say, right? Even on the weekly, your last lower high that led to the lower low. So this is one I'm already fully allocated in. Why? Because the last lower high that led to the lower low has already been taken. Right? So I would have been clear about Say I'm already fully allocated in, but I might increase my allocation some more even from the leverages I've taken profit on, because, well, this is just amazing. 4-month buyer zone, flipping to support. Weekly VWAP, holding. What about your 200 MA? Where is that? Oh, it's not enough. Oh no, it's right here. Yeah, you're above your 200 MA. If I get rid of this, 1 second. There we go. Right, so we have 4-month, 3-month, 6-month levels. We have 12-month levels on the left. All key areas. So again, in terms of market structure, you should just be focused on this box for now. Okay, this is more for lower time frame chart for me to see. Actually, let me get rid of it so you guys aren't confused by all the different levels. There we go. So these are the ones we need to be paying attention to, right? We've got 12-month levels. For me, for the way I'm looking at this right now, right, on the weekly, we have weekly seller zone, areas where sellers were active. You flip that into support, right? If this holds, I want a expeditious reclaim of this level before going higher, okay? Reclaim this 12-month zone, go higher. As long as you're below this, right? If you're really scared, you're like, oh, I don't know if I should pull the trigger. Make it easier for yourself. Wait until you at least close above 59.79. Okay. If you're really worried, wait till that happens. Wait until you're above that A point of the harmonic again, of the shock. But just understand where we are, right? Market structure is bullish. Higher highs and higher lows. Lower highs and low lows have been taken out. The midpoint of the harmonic's been taken out. This is just a reaction to a 5-0, right? This is just a 5-0 reaction. In an uptrending market, your bearish harmonics don't need to give you 4 retracements, right? So yes, just because we have a bearish 5-0 does not mean it needs to give you a double bottom, okay? For all you know, we could literally bottom here, do this, and go higher. So for now, to make things easier for yourself, if you're not already in and you're waiting, you're not sure if you should enter here, give yourself a cutoff point. If you see prices closing above 5979, definitely pull it. Not financial advice, but don't be completely sidelined, okay? But okay, as long as you hold this red box, again, in terms of risk to reward, you're great, right? As long as you hold this, you're looking for higher. If you get below this, you can cut, because then you're saying maybe you get 41 cents. Maybe you go back towards 34, right? If you do this. But as long as you're above this gray box, very easy to manage your risk, right? As soon as you get below this gray box, you can cut. But that's Say. You have one target now. That is, well, for now, 1.26 is the extension target for me, right? Above all-time highs. You have the ABCD, 886, perfect 886, by the way. So 1.13, right? 1.2659, and then you have that XA target up here as well. Right, there you go. These are your main targets. First things here, if you wick past, this is where I'd expect the wick to go to before new price action comes in. So maybe we see something like this, right? One sec. Something. Of course, this is not going to be a straight up, but just for the sake of argument's sake, maybe something like that, and then to new highs again. But Say another one is giving you fantastic opportunities on the risk to reward. You can enter, you can CMP entry right now, and your invalidation, if you do that, very clear, right? If you get below this red box, you're just gonna cut it. But that is Say. Let's look at SUI next. SUI, USDT. Have you hit the $3 range? Yes, you have. Beautiful. I really want this gray box on SUI. I don't know if you get it, right? But you can see how powerful this thing is. It's already reclaiming its highs. Your weekly seller zone right over here. Broke below, reclaimed it. Right? This is very bullish. Literally, Very, very bullish. You have a lot. Now, the only problem with this is not problem, but the only structure-wise, the only thing to be wary of is these naked wicks. Someone is long here. Basically, there's going to be stops here, stops here, stops here, stops here, stops here, right? So if you do get a nice run on liquidity, then in my opinion, we definitely get that great box, right? I will be adding heavily if we get that. Even if we go a bit lower, I'll just be add DCA, right? Very, very entry, because SWE's obviously in price discovery. This is something you want in your ports. Original entry again, that harmonic setup video, it was down over here, right? You had your macro Gartley, you had your local shark, just like Say did, and then you had all of this was happening in within a 4 month buyer zone, right? So that flip at the top was the entry model I gave in the harmonic setup video. Now is, if you close above here, risk management is slightly tough in the sense that all these wicks would be fair game, right? So say actually I would not recommend entering right now. You're below the VWAP. Wait for some more price action to develop. Wait for some price action to develop where your actual stops make sense. There's no logical stops if you enter right now. Okay, so even though the area is holding, is doing so by giving you a ridiculously wide stop, right? So unless you were willing to go spot, and by going spot, unless you were willing to be in the red for a while in case we did get a flush, I would not recommend entering SWE right now. As sad as that is, because honestly, if you're not in SWE, you're missing out on probably one of the strongest coins this bull run. Let me see, can I find anything? So you're left. Yeah, that's what I mean. They're just leaving behind everything. It's an inefficient move up. Very inefficient move up. Demand zone left behind, front ran it. Obviously the lows left behind, front ran it. This makes me feel a bit icky. Have this marked out, guys. Between 285 to 2.6971. Have that zone marked out. If you ever get there and you see buy stepping in, step in with them. Okay. This is the only. I'm happy with my sweet backs. This is the only way I'm sizing up. If we get down here. For now, I'm not interested in this particular area. For now, all you've done, retest the 4-hour 200, right? That's all you've done. Your daily 200 is way below you. Your EMAs, if we take a look at 10 and 21, you're below your 10-day EMA. You're holding your 21-day EMA on the daily. Your weekly 10 is again below you. Your weekly 21 is also below you. It's in price discovery, but it's also a bit overextended. Yeah, okay, don't worry about SWE for now. In terms of risk to reward, you have better coins out there. As powerful as this is in terms of risk to reward, you do have better coins out there. Definitely. But the grey box, for me, that'd be a bid. Hold this, raid this even. Again, something like this, reclaim. That'd be a beautiful bid on Say. If we got SWE, sorry, if we got it. But yeah. No entries on this, guys. The risk to reward just isn't there right now. It's not there. Okay, that's sweet. And last but not least, Ondo, right? Ondo USDT. Go. Ondo. Oh, okay, nice. Okay, you tapped the what was this? Firstly, this was your weekly buyer and seller zone right next to each other. You went and you tapped the top of it in that dump, right? You hit the top, had a nice reaction off it. So again, Ondo is another one where risk reward right now doesn't make sense. That was the entry. I'm already fully positioned in Ondo, so I'm not looking for entries. But if you are looking for entries, wait for the 3-day to close at a minimum. Let's see how this closes. Wait for the 3-day buy zone to pop up. Let's say the 3-day closes like this. That's your 3-day buy zone. Let me color that blue. If you get any pullbacks towards, let's say, the mid of the buy zone and you see that being held, that'd be my entry model. Wait for the 3-day to close before you make any decisions on coins like SWE and Ondo. These have already had ridiculous reactions, right? Both of them are going into price discovery. That's the reason why. But Ondo, we're up 218% from average. Right? Again, this is one of my top 10. This is BTC, ETH, Solana, Injective, AVAX, Vanry, SWE, Say, Ondo, Aptos, right? For those of you that aren't aware, even you should be if you've been in my streams before, but those are my top 10. I've been very vocal about that, right? But that is Ondo. So SWE and Ondo, you don't really have an entry model right now. Not like the other ones we looked at, but your risk to reward is really, really good, right? This one, your risk reward isn't as good. Wait for the 3 day to close, and then put a fresh buy zone down, and then make your plays based off any retest of that buy zone that comes in. That'd be the way to do it. But let me quickly check back to the chat here. The US BTC reserve Trump is planning to do. US BTC reserve, whereas I think obviously that's that's great. I think Putin's trying to do one for Russia as well, and the more that happens, the more adoption we're getting. But let's see if it goes through with it or not. Short term, I think that's going to induce a lot of FOMO. I think the harder the FOMO, the harder the sell-off is going to be, because that's just how it works, right? That's just market psychology. That news is always going to be there to drive the actual market price up. If markets kept trending up without a news to back it, then that'd look a bit shifty, right? But yeah, Russia's definitely. I think I saw something yesterday. Russia's trying to make a strategic reserve too. I think adoption is inevitable at this point, unless they, unless the governments are in on some cahoots and they just rug pull us out of nowhere. Um, but I also think that make BTC's price way more stable, right? So we're not gonna have days like those crazy Bitcoin like volatility days. I think those are gonna be getting rarer and rarer the more adoption we do see happening. So BTC is slowly going to transition to sort of basically what gold does, right? You will still be able to trade it, but you're not going to be able to catch these big 5-10% moves on the daily, anything like this, in my opinion. The more this gets adopted. We can look at ZRX, yeah. We can look at NOT, no problem. The bubbles do not include liquidations, bro. Those aren't liquidation bubbles. Those are just showing you the volume at which the aggressive buyers and sellers are coming in. What's up, Richard? How you doing, bro? Yeah, Say looks so clean. Say looks so good, brother, honestly. Thoughts on Pepe? Let's take a look. Let's look at Pepe. I think this hit new highs the other day. Oh, beautiful, right? Right, okay, this is something I'm going to now switch on to log for, okay? Right, I'm quickly going to switch to my Bitcoin chart. This is my scalping canvas, guys. Do not be scared. Close your eyes if you're scared of lines, okay? There we go. So let's take a look. BTC chop in. Let's look at Pepe. Pepe USDT gate. How much data have I got on this? 1 second. We have. So in terms of log for Pepe, let me do this fresh. 1 sec. We look at this in log firstly. Okay, so trend sub extension. That is. Don't need to worry about this one. Let's look at the macro structures. So on the weekly, we have this. Okay, so Pepe, what we're rejecting right now, we've hit the 764, 786 on log. Right, we're going to be chopping in between this and 702, 707. If this does reject and buyers just can't keep going over this, then I'd look for a move back down towards 19754 to 20252 next. And then if you're going to be scalping this, lower time frame entry models around this area, as long as the retest of this zone is successful. If you close below and you keep closing below, you'd be shorting this back down towards 16. I'm just going to say cents, 16 cents. But the reason we're rejecting right now, or we have the 764, 786 in this area on log. That's the zone we've got to. This is in price discovery, and the structure is very, very nice. So if we take a look, fib retracements, we have from this low to this high. That one isn't really in play right now. What about this one? This one right here. If we do that, there we go. Then we've SFP, the 1.886 and the 1.87. So you're basically this zone right here, the way I see it, this is the front run of your range extreme, right? So you've hit the front run of your range extreme between the 1.87 to the 1.94, and you're rejecting off of that for now. As long as at the end of the day though, in terms of seller zones, what do we have? We have this, right? So this is the area where buyers couldn't close any candle bodies above before. As long as you're holding this red box, especially the mid, you could honestly, as long every time you successfully retest that mid or reclaim it, for instance. So you go up and you see like a clean flip at this level, you get a retest on the 3, close above. You'd be completely okay trying to take a scalp long to the upside, because as long as this mid is held, that red box, this area here is going to be a target again for Pepe. But ultimately, this is in price discovery, so this looks good for higher. This looks good for higher. There's no weakness in this right now. This definitely looks good for higher. I don't think the top is in or anything like that yet for Pepe. Now on linear, those again, this was given in the harmonic setup video, right? We had a few different harmonics. So September, right over here, we looked at this massive blast off. Do we have? Okay, one sec. I see some structure. Let me just turn these off now. Not needed. What I do see is on the weekly, we have. So this is where your wave structure started. Went up to here. Came perfect. Okay, 382. So as moon boyish as this sounds, if this plays out, your minimum target for Pepe is around 35 cents. Right? Let me just anchor this properly. I'm going with the macro wick. Some people would be going from there, right? The way I see it, this is where this phase of the market actually started. So I'm going to take that from there. 0.382. Let's go with the 0.382. There. You have the 0.382. Your first target, 2.24. Reciprocal ratios, right? There we go. Lock it in place. The coordinate for that is 3.5. This one here. So then this settings, Control V, AB equals CD 2.24. You get above that, of course, you have the 2.618. So let's just get all of that pattern down now. 1 second. 2.618 is going to be up over here. Go. And last but not least, in rare cases where you are mega ultra giga bullish, 3.618 is your extension target. So let's zoom in. I'll just put all 3 down for now. Shit. Come on. Control V text. There's your AB equals CD 3.618. There we go. Perfect. So we have our 3 targets for Pepe. So ultimately on the higher time frame, right? I think this just draws zone between 35.371 to 38.271 is where I look for Pepe to top out. If you got above this, your deep extensions here, right? Of course, these are just for now, just like we did with the totals and BTC and stuff, right? Just targets where price sellers could step in. This doesn't mean set limit shorts for this area or anything like that. For anyone in the stream that's wondering, it just means these are areas to watch for once we get there. If you see weakness, you see divergences, that's bearish absorption going on here. You'll be good area to take profits, hedge a short, right? If you don't, look for the next target until you see that sign coming up. But Pepe now has, so this is what we're waiting for, like wave structure to develop. We now have wave structure telling us where the target was. We didn't really have that before, right? So these are the targets now for Pepe. They're very, especially these two, I think very possible. Very possible. I honestly, I think D's patternable as well. Peak Euphoria, yeah, I think definitely that's doable there. But for now, I'll just focus on the 2.24 and 618. for Pepe. Nice. Yeah, no problem, bro. Balls Gambler 69. Nice name. Um, yeah, okay, that's Pepe. So I had requests. I could take a few requests. The 2.2. Let me just do this, bro. Hang on. If I take a screenshot, one sec. Actually, wait. It's easier if I do this. So the 2.24. That's the 2.24, and this is the 2.618. There you go. No problem, brother. Okay, so that's Pepe. Okay, wait, hang on, let me go over. I had a couple requests, not, and there was something else. Look to say. Someone said not ZRX. So let's take a look at those two. ZRX. I've got a swing open on ZRX because ZRX price structure was insane. There we go. This hit, the B's been hit. Nice little pullback from the target. I will size up on this since I took some profits there. Weekly 200 being respected, right? If you get the retest of the grey box, that'd be amazing, honestly. That'd be a beautiful high-low, of course. ZRX, right? The way I was looking at this, a few different things. It looks like just one harmonic, but wait, hang on, is this the one? Is this the one? There's one where we have like a 3 or 4 different harmonics at once. Wait one sec. No, I think it is this one. Okay, never mind. Yeah, so ZRX had a M shape. This is a bat, right? The 2.618 and the 886 of the bat is here. This is where your harmonic convergence, right? Your Fibonacci convergence is happening at this area. I'm sure you could pattern down a AB equals CD if you wanted to. One sec, let's take a look. A, B, 517, so basically 0.5. If that's the 0.5, no, so you went way past the ABCD. Yeah, no, in this case you didn't really have one. Your 2.0 for this ABCD was all the way up over here. But what we can do is leave the ABCD on, and then if I just go ahead and do something like this, there you go, right? Not only are you retesting your 200 MA on the weekly, you're also retesting your AB equals CD, right? This past AB equals CD 2.0. So that's another form of confluence for us. Right over there. Another way to look at it, on top of that confluence, we had over here, if we take a look, current cycle, here is your seller zone. Area where sellers were active in the past, broke out, reconfirmed as resistance, broke out, you're trying to confirm as support, right? So your confluence stack here, your weekly 200 MA, your 2.0 of the AB equals CD, and now the 0.5 of your weekly seller zone as well, trying to be flipped into support. That is bullish, right? So something like this for ZRX is what I'd look for. Again, for spot, you can ladder in if you want. If you lose 49.67, just cut. You don't want to be holding below there, because we can see below there it's possible to go back all the way down towards 32 cents, right? But ZRX, I'm already in this, so I'm not going to be taking any entries here yet. I'm going to wait for some more structure to develop on this one because I'm in a swing. But again, this is just one of those ones that was in the harmonic setup video, right? And I'll do a mass update. I've been updating it on my Twitter for now, just like, you know, the plays we took from the harmonic setup video, because I don't want to massively P&L dump and clog the channel up. But once I take profits on majority of my positions, especially once, like, you know, everything's played out, basically pretty much everything, I'll do a mass update on the swing. But yeah, you had a cumulative structure at the bottom, smiley face, breakout, you hit the B target. You're just looking for a higher low now so that you can go and take out your external targets up here. That's all. This is a bullback, right? Let's call it a bullback. It's a bullish pullback. We just need to maintain the 200 MA. We don't want to go below this, right? That's the key thing. And what you have here, easy to manage your risks, because what you're saying is you can ladder in, you can DCA through this red box, right? If you lose the red box, just cut it and just enter again when the mid of the red box gets reclaimed. So let's say you ladder in and you wicks you out like that, and then something like this happens, you can just re-enter here. Whatever tiny L you take here, you would more than make back, plus a tenfold when this goes back up over here. So that's how I'd personally do ZRX right now. This red box would be what I define my entry model around. A lot of confluence in the area we're currently at. Okay, ZRX, and the other one was not, right? Not USD. So which one do I go with? One sec. I've got two different charts. Yeah, this one right here. So we had this one and we had this one. This harmonic I'm not gonna take, right? This one is a nasty harmonic. So let's not look at this for now. Let's look at the other one instead. One sec. Let's look at this, right? So let's look at the Bybit chart. We have a potential bat should not decide to give us a macro flush. Okay, this is something I'm watching. Why do I say there's a potential bat? If you go to the daily, X, A, B, 0.5, C, 0.478, D, 2.618 plus 886 basically, right? If you got this, it'd be phenomenal. As long as you're above this grey box, however, you can see support, 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 radon liquidity, reconfirmation of support. There's no guarantee this harmonic's gonna play out. Okay. On the daily, we have a buyer zone. On the weekly, we don't have a buyer zone. What we have is an order block right over here. The order block has now been mitigated, not fully, but half of it's been taken, right? So we had a reason as to why we wicked down there. That weekly order block was also a modified daily demand zone. It was also a daily order block, right? There's a lot of liquidity confluence here, basically, right? But ignore all that. In terms of support, what we have is this grey box. You can see very, very clearly. As long as you hold this, you're fine, right? The only thing to worry about here is if you start closing below this grey box. Again, risk is easy to manage. If you were to enter right now, your invalidation would be very, very simple. If you close below this grey box, you can see it's not that far away from where you currently are. I wouldn't be holding this asset, and I mean close below. So if you're doing, let's say you enter on the daily, look for 4-hour closes below, right? If you get a 4-hour close below, even 1 hour, if you want to be a bit more jumpy, want to be a bit more active, dynamic with your risk management, 1 hour. But basically, looking for those candle body closes below. For the daily, 1 hour closes below is good enough, right? 4 hours if you want to be less prone to being wicked out. Very, very easy to manage your risk. Hopefully you can see why, right? Support, 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 radon liquidity. As long as this holds, you have a cumulative structure. I wouldn't be surprised if it then went higher from here, right? So you can do a harmonic here, right? There is another harmonic in this current area, and if I was to point it out to you guys, let me just do this once, one sec. Do that, right? The other harmonic that I'm talking about is there we go, is this one here. I'm pretty sure there's another harmonic here because that looks like an M shape to me. Let's see if my intuition is correct. We have 582. No, that'd be a Kali, so we want to go less. No, wait one sec, let's do this on the 4 hours. I just want to see if there's any other M shapes possible over here. So there's your low, there's your high, there's your low, there's your lower high. Okay, so 1.618 to 2.618 typically, right, for a bat. So your actual extension is a bit deep, but it doesn't really matter, right? Over here is where your the 886, let's say, of your harmonic, right over here. So if I go to settings, that always shits me up. We're looking at 7. We're looking at this one. There we go. Right, let's lock that in place. This is the BAT 886. So as long if you stay above this, great. You're above the 86, so you're bad. Higher. If you're below this, then that's something we could. It'd be nicer if we were above, basically. Um, but yeah, so there is a completed harmonic here, guys. There is a complete. But if we got this, honestly, that'd be even nicer because that is a literal perfect convergence of ratio 618, 886, 0.5, right? Literal perfect convergence. And on top of that, we might just have an ABCD. Let's take a look. High, low, lower high is a 478, close to a 5, but the candle body close. Possible, but not the best. What about from here to here to here? 436, and that is definitely a 382, basically. You can take this as a 382, but then that would give us target. No, yeah, okay. Forget about ABCDs for now. You could have a potential one, but the ratios aren't nice, right? So you didn't get that. You didn't exactly get that 0.5 here. So the closest ABCD you have right now on this is this 478. Close to 0.5, so you can try and target the 2.0, of course. And the 2.0 again is here, basically. But there's no point giving this on, honestly. Just do the harmonic for now if you're going to do not. But in terms of entry models, as long as you're above this grey box, you have a reason to be in this trade. If you close below this grey box, you have a reason to not be in this trade. You can wait for the 3-day to close, right? Wait for that 3-day buyer zone to be created right over here. Let's say the 3-day close like this, that'd be a 3-day buy zone. And then what you could do is you could enter on the next 3-day DCA if you go slightly deeper into that 0.5 perhaps, right? But if you wanted to go very, very simple, not do anything extra, literally just open and close, you open now. If you get it, if you close 4 hours or 1 hour candles, whatever you want, below the grey box, just cut. At the end of the day, you're at an area where support is being established very, very cleanly. But just understand the reason we don't hold below this is firstly, you can expect moves back down towards 0.55 cents. But if we do get a nasty flush, right, the dump isn't over on Bitcoin, then I won't be surprised if this harmonic ended up being hit on this asset. Alright, so just have some alerts. I'm gonna have some alerts set up. Hang on. So I'm just gonna set an alert up right over here, there. And once it goes past that, I'm just going to pay attention because basically the harmonic's complete. Any buy stepping in here, I'm going to take action, right? Lows will be raided, market structure will be created. You could, if you did get here, right, 20-40-40 rule, you could still use because you'd have a key area to CMP entry at, right? And if the entry's risk reward's good, you can increase your CMP size. Leave an allocation for DCA / if you flip local resistance support, and save an allocation for when the last lower high that led to the lower low gets taken out and a high low gets put in. So for now, entries or not is basically, look, if you lose this zone here, cut it. If you don't lose it, hold it. You'll probably end up going back higher. Very, very simple. I know it was a bit long-winded, but I just wanted to show you the different ways you could be looking at this asset, that's all. So that is not. Is there any way to automate a sell order based on daily close below? I'm not sure. There might be on some exchanges, bro. BC sitting a CMP for not. One sec, bro. Let me look at the chart you just put in. Yeah,